mortgage payments due in full right away. So if you had trouble making 1, 2, 3 payments, how are you going to in turn make 7 payments all at once?
At one shot.
At one shot. So, okay, you may have experienced this as a realtor. So whenever we had the flooding really bad here in the Lafayette area, a lot of people did this, but they weren't properly educated, and they didn't know that if they went into forbearance, that all of those payments were going to be due immediately in full. And what happened is a lot of people had to go through short sale because they couldn't afford to make all of those payments right away. And most people don't realize that. What did you guys have to deal with it or see any of that?
Only in a couple of cases.
Yeah.
We saw it. We saw it in a couple of cases, but they were able to take care of those. But fortunately, they were financially sound,
right,
to make that jump.
And that's what a lot of clients are telling me is, hey, look, I don't need to do it, but I have my job now. Things are good. But who knows what's going to happen a week, 2 weeks, 3 weeks from now. I want to be proactive instead of reactive. And that's fine, but it's going to come at a price, and it can come at a very steep price. And if people aren't, well educated on this subject, then it can cause a lot of issues for a lot of people, a lot of families. I would also advise people to ask a lot of questions and to make sure to get every single thing in writing and make sure that you fully understand the terms of your forbearance that you've applied for.
That sounds like you may not even be all the truth of the people you're getting almost.
Yeah.
It's the devil's in the details,
Right.
as what's been heard multiple times. So, like, if you are kicking around refinancing or purchasing another home soon, is there any sort of penalty for whenever you go, if you're going to go refinance that loan or purchase something else, if that's on the radar?
Yeah, if you've applied and we were waiting to figure out how this was going to be handled, and if, as of right now, if you have applied for a forbearance, you are then stating that you have a hardship. Chances are no mortgage company is going to want to lend money to someone who is in writing stated that they're going through a hardship. So I'll give you a few examples. Let's say you want to refinance the home that you're living in, but you've applied for a forbearance.
Right.
That new lender who you're trying to do that refinance with will not be able to refinance you. Let's say you own a home that you live in and you have a rental property wherever.
Right.
And you continue to pay your mortgage on your primary residence, but you decide to do a forbearance on your rental property because your tenant can't afford to pay rent anymore, or you do it to be proactive. If you want to refinance your primary residence at that point, even though that second home, that investment property, is not the subject property of the new mortgage, you will not get approved to refinance your primary because, again, you're stating that you have a hardship. It's a really big deal, and I don't know if a lot of people really and truly understand how impactful a forbearance can be. And look, if you need a forbearance, if it's you're trying to
the absolute last thing to check off.
Yes, if it's between you putting food on the table and making your mortgage payment, and you have no other way to get it done, then yeah, a forbearance is for you. But if you're still making money, if you can still afford to make your mortgage payment, or if you have money in the bank and you can make those payments, please still make your mortgage payments, because that forbearance will probably only cause more harm than good.
Let me ask you another question. How are you seeing on the home mortgage side being able to see some deferments, which is actually, like you mentioned, tacking it on at the end of the term?
We haven't seen any deferment yet. I think investors, so the mortgage world, you have banks, you have non-bank. So what's the difference? A non-bank is like us, a mortgage company that does not have deposit holders. Then you have your banks. So think whether it's an Iberia bank or a Chase Bank or whatever. They do mortgages, but they also have deposit holders. So you have those facets. And then you have your GSEs, which is your Fannie, Freddie, Ginnie. And then you have your aggregators, and then you have your servicers. There's so many back end people involved in the mortgage process. And at the end of the day, if the borrower isn't making a payment, that servicer of the mortgage company still has to make the payment on their behalf.
Mm-hmm.
Because investors on the back end want and must get paid. And that's what a lot of people don't think about is if you follow this through and if you really think about where's the money coming from, it's not coming from the federal government. The federal government said, hey, everyone, you can apply for forbearance without having to prove any hardship at all.
Right.
They've made it very easy, but they don't educate.
Right.
So what happens is we're Assurance Financial, we service a portion of the loans that we originate.
Mm-hmm.
And let's say, if a certain percentage of our clients decide to apply for forbearance, then we as a company, we as the servicer have to continue to make those mortgage payments on their behalf during that forbearance period. Not only the mortgage payment, but the taxes and the insurance payment as well that comes along with that.
Right.
It's a lot of money. So let's put it on a bigger scale.
Snowballs quick.
Yeah. So let's put it on a bigger scale. Everything that everybody's been talking about, whether it's, flattening the curve with coronavirus or housing industry or whatever, everybody's talking in models because this is all real time. So nothing's definitive yet. So it's projections and assumptions. So they're anticipating that up to 25% of outstanding mortgages in the country could possibly apply for forbearance. If that were to happen, it would cost our industry, it would cost servicers $70